Defying market expectations, Bank Indonesia has raised interest rates, will be effective in combating higher inflation. What other impacts will it have? Or to learn more, we are going to discuss with the chief economist of Bank Permata, Josua Pardede. Joshua, thank you so much for joining us this afternoon.
Thanks for having me, Krishna.
Right. So interest rates have been raised by Bank Indonesia by 3.75%. Now, taking lessons from the Fed and the U.S., which were late in raising rates and they're in all kinds of trouble, do you think that this was the right timing for Bank Indonesia to raise rates?
Yeah, I think the decision to raise the policy rate, I think, is more representing a preemptive and forward-looking measure in order to mitigate the rising core inflation, because this is, I think, what the part that Bank Indonesia seems to be consistent with the statement, since the beginning of this year, taking into account that the core inflation seems to be manageable, but Bank Indonesia is currently expecting that the core inflation will rise beyond 4% level, as indicated by Governor of Bank Indonesia yesterday in the press conference. And then I think there is no such a late time or lagging time for BI decision, but I think this is the right time when also there is also some indication that the government also will adjust the subsidized Pertalite fuel price in the near term, in order to because there is some consideration from the government to raise the fuel price, because the quota of Pertalite will be diminishing in October or November. So that's why I think the higher probability of fuel price hike leading to the higher expectation of inflation and leading to the expectation or the decision of rate hike.
Right. So as you mentioned there, the government has been clearly expressing plans of raising subsidized fuel prices, which will have a big impact on inflation. So do you think these interest rate hikes will be effective in combating that higher inflation? And what is your projection in terms of inflation now that Bank Indonesia has raised interest rates?
Yeah, I think monetary policy stance or the policy rate hike is one of monetary measures that has been done by Bank Indonesia. But I think there are other measures from the fiscal policy side in order to mitigate the expectation of inflation by managing the food inflation prices, food price inflation, because in order to manage the expectation of inflation, because I think the government is still reviewing the impact of inflation, the impact of fuel price hike to inflation and the economy. But I think the government also, at the same time, needs to lower the expectation of the food prices, because currently the food prices, I think, could be managed better, in the near term by the government. So I think we are expecting that the combination from the monetary policy stance by raising interest rates, and I think this is not the end of the monetary policy rate hike. We are still expecting that Bank Indonesia at least will do another 50 basis point hike by the end of this year, and then this needs to be collaborated by the fiscal policy in order to manage the food prices.
Right. So as you mentioned there is this mix of fiscal and monetary policy as well. It seems like it's being done at the same time. So it seems like there's good communication on that side. I want to stick to inflation first. Do you think that both the Indonesian government and Bank Indonesia are on the right path to dealing with inflation right now? And do you think inflation in Indonesia will be handled well?
Yeah, I think, as I mentioned, rising inflation from food and energy sides is inevitable. So I think in order to mitigate the expectation of inflation, I think this is the the keyword, the expectation of inflation, the Bank Indonesia needs to give early signal, yeah, in order to manage the expectation of inflation by raising interest rates this month. Yeah, although we are most economists expecting maybe next month, but I think this is the preemptive signal done by the Bank Indonesia. I think, and then in order uh, to mitigate the negative impact of higher inflation this year, I think from the fiscal side, the government also needs to allocate some additional on budget on social benefit, yeah, in order to mitigate the impact of inflation to the higher poverty and also unemployment, yeah, because we in the past there is a clear correlation between a higher inflation will lead to the higher poverty or the unemployment. So I think that's the combination from the fiscal and monetary policy. I think on the right track to mitigate the rising inflation this year.
Okay, on the right track, as you mentioned. Now let's focus on the rate hikes. As you mentioned, you're projecting maybe Bank Indonesia will have to raise interest rates by 50 basis points or 75 basis points until the end of 2022, if I'm not wrong. Correct me if I'm wrong. But what impact will this rate hike have on Indonesia's economic growth? Will we still see positive economic growth in Indonesia this year?
Yeah, in the past, a rate hike from the central bank will lead to the lower consumption and also lower investments in general. Yeah, because the higher interest rate will lead to the higher cost of borrowing, and then the higher interest rate that will be impact the higher rates from the banking sectors, both in deposits and also lending rates. I think this will lead to the because the initiative of raising interest rate, because the central bank tried to push or to attract the money, yeah, in the circulations, yeah. So that's why I think this will lead to the lower consumption, and then because of the higher cost of borrowing, this will lead to the lower investments. Okay. But I think for this year, because there is still lagging time, yeah, for the transmission, because in the past also the banking sectors has lagging time in terms of transmission policy rates, yeah, from the central bank to the banking sector. So I think we are still expecting that full year 2022 the GDP growth will be ranging around 5 to 5.2%. Okay. But the impact of the rate hike this year will affect the soonest at the beginning of this next year, yeah, in 2023. And then we are also expecting that in the next year the GDP growth could be lower, yeah, as an impact of the higher interest rate this year.
Right, but as you mentioned there, you're still seeing positive growth, 5% and higher for this year. Now let's talk about the impact on the financial markets. What kind of sectors will perform more optimally in this sort of condition of Bank Indonesia raising interest rates, excuse me?
Yeah, I think in the past, we are looking at most sectors will be impacted negatively by rate hikes from the central bank, because as I mentioned, the cost of borrowing that will apply to all sectors in the economy also will be higher. But we are noticing that the banking stocks, yeah, or the finance sector stocks in the last 2 days, I think this sector also still are appreciating, yeah, because we are expecting that the banking sectors or the consumer-related sectors will be highly more impacted compared to other sectors, yeah, because as I mentioned, the higher cost of borrowing will lead to the higher cost of fund, and this will lead to the lower net interest income for the banking sectors. Not to mention also from the sectors that will be less impacted. I think we are looking at the current situation that the global commodity prices seems to be higher compared to the pre-pandemic level in 2019. So we are seeing that the energy or the commodity-related sectors, mining sectors, will be less impacted by the policy rate hike from the central bank.
Right. Focus on energy stocks, as you mentioned. Now, we have just about 30 seconds left, Pak Joshua, but can you just explain to us very briefly the impact of rate hikes from Bank Indonesia on the bond market in Indonesia? We saw a sell-off after the rate hike, but what can we expect in the near future?
So in contrary, I think the bond yields for the 10-year bond yield, government bond yield, I think in the last 2 days dropped by 12 basis points, indicating that foreign investors or the investors started to enter the bond market, yeah, because we are looking at the year-to-date foreign flows recorded outflow from the bond market, but I think most domestic sectors and also currently the foreign investors started to enter the bond market, yeah, because they are also looking at the policy rate differentials from Bank Indonesia and also the Fed that will be diminishing after Bank Indonesia raise interest rate this month. So I think, but again, we are still expecting that the bond yield for the 10-year government bond yield will be ranging around 7 to 7.3% by the end of this year.
Okay, Chief Economist of Bank Permata, Pak Josua Pardede, thank you so much for joining us this afternoon on Jakarta Movers and
Thank you
Shakers.
for having me.